All right, in my last video, I noted that we're getting pretty close in to a final intermediate bottom in gold. Don't think we're quite there yet, but we're getting pretty close, within maybe a week or two. So a couple of things here. I noted before that the intermediate uptrend line would need to be broken. That has happened. We've broken that trend line. I also noted that almost all intermediate declines have at least an ABC pattern, and that is now playing out. We've got a lower low here, so we've had our A wave down, our B wave bounce, which was pretty truncated, didn't last long. What was this, four or 5 days? So this cycle has left translated, extremely left translated. Would have normally expected 8 to 10 days, but then it kind of wasted most of the cycle just kind of churning sideways, trying to hold above this trend line. And then when the trend line finally broke, we got a retest that wasn't able to hold above the trend line, and now we're getting some follow through to the downside. So we're in the C wave down. Like I said, I don't really think there's going to be 5 waves during this intermediate decline. So we're in the final decline. I'm beginning to become a bit skeptical that we're going to have a bloodbath phase. And I go over this in detail in the weekend report, which just means that it's going to be a little bit more difficult to pick the final bottom. But it's we're still there's a couple other signs that I've gone over in detail in the weekend report for what I'm looking for. One of them is in the mining stocks. One other parameter that has been met. Let me switch this to the weekly chart. Almost always an intermediate decline will turn the 10-week moving average back down. The 10-week moving average is more or less the same thing as the 50-day moving average, and you can see that that has also occurred here. We've gotten marginally oversold on the 5-week RSI. That was something else I really wanted to see. I wanted to see the market get oversold. I don't think it has to get extremely oversold or embed in the oversold condition, because as I've been saying for quite a while now, I'm pretty sure this is a final 8-year cycle low. So I don't think we need to get this kind of look that we had as we were moving down into that 8-year cycle low. So all I really need to see is an oversold condition. Doesn't need to be heavily embedded. So we've met that requirement as well. Now let me go back to the daily chart. Actually, I'll just keep this on the weekly. But we had a big follow-through candle down here. I'll show you silver. It's the same and worse. This is the weekly silver chart, and the miners. We're getting some separation from this 10-week moving average, and we've just now broken the intermediate uptrend line in GDX anyway. GDX is tagging oversold, but not really. It hasn't really signaled a fully oversold condition yet, and I don't think any of those candles, in my opinion, are bottoming candles. I would like to see maybe a narrow range week or day in all of these to give us a final bottom. So I don't think we're quite there yet. So you've still got time to join the SMT, and I've gone over what I want to see in the weekend report that would indicate to me that the ICL is done, the daily cycle and the intermediate cycle have bottomed, and we're starting the advancing phase of the next intermediate cycle. And I am convinced that this intermediate cycle is going to break out above these all-time highs, and when it does, that is a huge consolidation pattern is going to produce a monster move, in my opinion. Let me widen the chart here. All right, so this intermediate cycle gave us a move from the 8-year cycle low up to retest this resistance zone. And this test came really late in an already stretched cycle, so there was virtually no chance, well, very little chance of a breakout and almost no chance of a sustained breakout. And as we know, we didn't actually get a breakout. Once this intermediate cycle bottoms, we're going to test this resistance zone again, and we're going to do it quickly in the intermediate cycle. And breakouts that occur early in a cycle are the ones that tend to produce sustained moves. So once this bottoms, I think we quickly come back up to test this these all-time highs, this resistance zone here at roughly 2100. We're going to break out above that 2100, and then there's no resistance above this. And at that point, I think we probably started the bubble phase in gold. And that could, it doesn't happen real quickly. A bubble phase, once it kind of starts and the general public kind of starts to catch on, usually lasts about a year and a half. This could last as long as 5 years. I kind of doubt that, but it might. But I'm on record that once we clear this resistance zone, I think this 8-year cycle will give us our bubble phase one way or another, whether it comes quickly in a year and a half, 2 years, or whether it takes 5 years to play out. But it's going to give us our bubble phase in gold. And I'm on record as saying that 5,000 is going to be a piece of cake, and 10,000 isn't out of the question. So this is this correction. This is your last chance to get positioned for that breakout, and then you just want to hang on until we get to that period where every Tom, Dick, and Harry is buying gold and silver, and people have become convinced that the dollar in the United States is circling the drain, and there's no coming back, and your only salvation is gold and silver. And when you see that kind of behavior from the average person that has no clue what's going on, they just know that their neighbor is getting or has gotten rich by buying gold and silver, that's the bell ringing that you need to sell your gold and silver to these unsophisticated retail investors, and get on the sidelines and look for the next opportunity. But this is the opportunity brewing. This pullback here, this is setting the stage for the breakout above 2000. So I'll just note again that this is the SMT is open to anyone that wants to subscribe. I'm going to get you in. I won't get the exact bottom, but I'll get pretty close. I'll get more than close enough to make a lot of money when this breakout occurs. Once I think the final bottom is in, then I'll close the SMT. And as I've said before, I want to prevent people from buying at these tops when their emotions give them the all clear. I want to try and teach people to buy when they're scared, and we're getting scared here, but I think we need a little bit more fear in this market, and we've got 1 or 2 more parameters that need to be met that convince me that the ICL is done, and then we want to get in and hang on for the ride that breaks out above this and starts the bubble phase in gold.